What is going on YouTube? It's Sank and we are back with another one. Alright guys, so in this drop I'm coming at you with a couple of plays to make some quick profit off. But before I get the show on the road, if you'd like to help out the channel by hitting that like button, and if you're new, join the movement by hitting that subscribe. So hopefully you managed to get through the trading session just keeping some of that confidence, some of that energy. And I know it's testing out there right now for the growth plays, but you guys know along the journey we are going to encounter these hurdles, and this right here is just shaping up to be one of these week-long hurdles we just need to get past. Now because it's midweek, I'm switching it up, coming at you guys with a couple of plays to get in and out of with the aim of making quicker returns. Now right now these plays are just bouncing around in their consolidation channels, so with good timing we can get in low, ride the momentum and sell before they make a price reversal. We call that selling the rip. Now it gives us the opportunity to make those 10-15% returns in the market. Now I know we've had a string of red days this week, but you guys know it's not going to be red forever. We are going to hit that green day. So I want you guys to be armed with some of the right plays so that when we do move into momentum, you guys are ready to crush these markets with me. So that being said, in this one I've got a jam-packed one for you, so do make sure you stick this one all the way through for me. You know what time it is. Let's get ready for the first one. Our first one, that's NIU, ticker symbol NIU. Now I have all these easy money plays where the idea is to get in and out of quickly. You guys want to ensure you're getting in when the market is stable, or preferably when the market is showing momentum, so not like a day like today. So if you check out the performance in the day, you can see the volatility in that price with that downwards trend, and that was how it was across the board for these growth plays. So as I say, you want to make entry ideally when there is some momentum, when we're going for our easy money plays. Now check this out. I've got 50 shares in the clip on this one. Now that's my long-term investment. If I'm gonna go short-term on this one, I might add an extra 25 or another 50. But I want you guys to pay attention to this. My average price on this one comes in at $32.99. If we check out the charts, support on this one comes in strong at $33. You guys know the aim is to always get these plays as close to support, whether we're going for our long-term investments or these easy money plays. Regardless, I want to get in as close to support as possible. And you guys know I've taught you the way to test the strength of that support, see how many times it's rebounded off support. And if it's done that more than 3 times, it's looking like it's good support at that level. Now, this is a play where the earnings are coming out on the 17th of May. You guys know earnings day brings us volatility, so we've got that runway where we can get in and out of the play before earnings day. And the idea is to take this one from where they're at to $38 and then cash out, because if there's continued market volatility, there will be a price reversal and they'll head back down to the level that they're at right now. Now, as I say, this is a play I'm also going long term, and you guys know I've got a plan and strategy for every play that I'm in. On the long-term side, I'm looking to take them from where they're at up to $60, but that's not going to be without the market volatility and turbulence along the way. So that's why I'm looking to also play this one in the short term. And also check this out, I've got my stop limit on this one set at $31. So if this one drops down to $31, it will cash me out of the play and I can move to the next winning play. Let's move to the next one. The next one I've got for you, that's Grow Generation, ticker symbol GRWG. I've got 110 shares strong in this one. You guys know it's one of my long-term plays also, but this one's going to be subject to that market volatility. It's going to bounce around in that consolidation channel. So there's the opportunity with good entry and exit to get in, get out and make that quick profit. So idea is to get them where they're at and take this one up to $50. Now with a good couple of green days, this one will have no problem climbing back up to the top of their consolidation channel. So again, it's just another opportunity to play these plays in different ways. As I say, it's one of my long-term plays. We've got good future ahead of it, but along the journey, I'm not going to let the market volatility take those short-term profits away from me. So same thing with NIU. You want to get into this play on good market momentum and ride the play up. This one's got several catalysts along the way to push them up. They've already had their earnings. They've done very well. Their next earnings date is coming out on the 12th of May. So ideally, you want to get in and out of this one before that day. Let's move to the next one. The next one I've got for you, that's Marathon Digital Holdings, ticker symbol MARA, coming in at $33. Now this one's showing some stability around that low $30 region. So this is the most stable I've seen this play move since I picked them back up way back in November. So this is a good sign. Now we know there's that linkage to the price of Bitcoin. Bitcoin right now itself is showing stability around the mid 50 region. And if Bitcoin climbs up to that 60, this will give Marathon the firepower it needs to make its move up to the $40 region. So again, opportunity to make quick profits on this play. And the way I like to play marathon is in the short term. Ride them up, cash out, sell the rip. When they make the price reversal, get ready to buy the bottom. So as I say, this is a play I want to bring to your attention, because as soon as we see momentum in the price of Bitcoin, this one is ready to go. So I want you guys also to net some good short-term returns with me on this play. This is a play we've recycled around 10 times since November. I'm looking to continue recycling this play. So you guys remember this one, that's Roblox, ticker symbol RBLX, coming in at $66. That's why I say to you guys, there's no rush to pick up these types of plays like a Roblox or Coinbase that command those super high valuations. The better entry is coming. You just got to be patient. Market forces will bring them down. So this one's now currently standing 66, and you can see they're trending towards retesting those previous lows of $65. So the game plan with this one is to stand back, wait and see how this one moves over the next couple of trading sessions. If they break those previous lows, if they drop to the 64 or 63, then we wait and see if they show stability. If they then show stability around the low 60s or a bit of momentum at that point, then you could ride the wave in this play, because this is a play that can easily climb back to the 70s, the mid 70s, even the high 70s. So you can net those good short-term returns on this play. Now, because of the valuation, the nature of this play, this one is going to remain a volatile play. So it makes it an ideal, easy money candidate for us that we can just repeat over and recycle time and time again. Now, this is a play that I'm not going to add to the long-term portfolio, just because I tend to not add these plays of super high valuations to my long-term holdings unless there's a real corrective move in that stock price. This one hasn't seen it yet. It's just been subject to general market forces. Now, if there's a real corrective move which puts that valuation in check, then I can consider adding them to the long-term portfolio. But in the meantime, we'll just enjoy those short-term returns on this play. Alright guys, so those are the plays I want to bring to attention and give you the strategy to go with. Now, I don't want you guys to be getting impatient when you see the market moving volatile, because remember, we can just use that to our advantage by making timely entries, get into these plays low, ride the momentum, sell before they make that price reversal. It's as simple as that. And for as long as the market's going to be volatile, we're going to continue to win on these short-term plays. So as I say to you guys, regardless of what condition the market's in or whatever it's doing, there's always opportunities to be winning. So if you've been rocking the channel, you know what time it is. Question comes from Rick, says, thank you for your videos, you do an amazing job. Quick question, I'm a bit worried about sitting on high growth plays with high PE ratios and high price to revenue numbers. Should I be worried about these crashing and coming back into normal range? I'm in plays such as CrowdStrike, Palantir, Square, Alibaba, CCIV, DraftKings, Gold Nugget, etc, etc. I was going to sell out until I saw your video. Hope you can shed some light the way you do. Much appreciated. So this is a great question I want to come on and share with you guys, so I appreciate you, Rick, for sending this one in. Now, I'm assuming you all know the price to sales, price to earnings, what it means. In a nutshell, it's just how expensive the stock is based on its revenues and based on its net income. Now, the reason why we have these types of plays in the portfolio, namely our growth plays, is because I'm trying to get you guys accelerated returns in the stock market. Now, if I get you guys into Wells Fargo, Goldman Sachs, and just stick with those types of plays, your portfolio is going to move very slow. I'm trying to get you guys the quickest returns in the portfolio in the most quality plays out there in the market. Now, you guys got to understand the reason why these growth plays are going to command these higher price to sales, higher price to earnings ratios is because of their forecasted growth. Their forecasted growth, some of these plays are forecasted to grow 100% year on year. So naturally, they're going to command a much higher valuation than a play that's growing more slower. Think of a Coke, for example, or a McDonald's that's not growing 100% year on year. So naturally, their price of sales, their price to earnings is going to be a lot lower than a play like a Vuzi, for example, which has a very high price of sales. But this is the key. Those types of plays are perfectly fine to add to the portfolio and very welcome and recommended. I'm talking about the growth plays, by the way, as long as they have good growth trajectory and they can continue to grow. So that's why I say I'm very careful the plays I put you guys on that have those high valuations. I'm ensuring that they've got the growth path ahead of them and that they stand every chance of continuing to grow these big numbers, the 50%, the 70%, the 100% year on year, because over time, they actually grow into their valuation. That's the whole idea about it. So if you look at them 5 years down the line, their price to sales, price to earnings is going to be a lot lower. So think of plays like Microsoft, for example. Their price to sales, price to earnings was much higher 15 years ago. That's because they were in a more accelerated growth phase back then. But over time, their price to sales has dropped from above 10 to below 10. So that's why a lot of these plays that you mentioned, their price to sales is above 10, but over time it should drop to below 10 as long as they can continue to grow moving forward. So that's the key. So that's why I say with these plays, it's important that we stay on top of them and ensure that they're growing year after year. And any of these plays start to lag, start to kind of deviate from the script, then it might be time to kick these plays out of the portfolio, because we only need plays that continue to grow. So that wraps things up for this one. If you'd like to help out the channel, do hit the like button, and if you're new, join the movement by hitting that subscribe. Now, as you progress through the week, you guys know I'm turning up the heat to ensure you guys are able to continue navigating these markets with me. So I'll catch you on the next one.